Right, folks, here's my outlook for the week. What date are we today? We are 18th of April, so yeah, week commencing tonight, really, 18th of April. Right, dollar index. I've been a bull of the dollar all week, all year, I should say, since January. So we've for the last 3 months, as you'll know if you're a subscriber. But wow, it's impossible to hold a long dollar position. It really is difficult. Look at this. We are just running up a little bit, down a lot. The pullbacks are just immense. We're now pulling back almost to the March low, hardly a bull trend anymore, really. The support is really this mid-March low, 91.30, 91.20. We got some fibs levels going on there, and it's the 50% retracement of the whole move up. So we've really got to hold 91.30. We are actually holding the 50-day moving average, which is at 91.58, or we're hovering around there anyway. We sort of closed above it or on it really for the week. This is a real tricky one. I'm going to stick with the bulls, but I think we're probably just going to enter a sideways trend. It's almost impossible to hold a long position anyway because the market has such deep pullbacks. So I'm going to consider that we're probably just entering a sideways range. Break below the 100-day moving average, then I would consider that probably the bears are gaining control. So below 91.00 in the dollar index could lead to further significant decline. So we're probably at quite an important area. Where did we get to on Friday? The low is 91.48. So just watch that. 91.30, 91.20, below 91.00, I would be more negative for the US dollar. It's been really difficult trading the Aussie dollar. This is a 3-week period where we had a head and shoulders pattern, we broke the neckline, and then we just hovered under the neckline for 3 weeks. Literally down one day, up the next, down one day and then up the next. Big blue candles followed by big red candles followed by hammers and dojis, and just what a mess. How do you trade this? I personally found that very frustrating. If you managed to get trend lines on that on the short-term chart and trade the range, then you did well, but that's not my kind of market. Big blue candle Wednesday last week, rocketed up through the 100-day moving average, that what I thought was the neckline to a head and shoulders, but clearly wasn't because it didn't hold. That whole head and shoulders pattern never played out. We're holding above this trend line now, which is just a trend line, not a neckline. 77.00 is where we've got to hold above. Again, we're holding above the 50-day moving average right now, so this kind of looks positive. I don't think we're in for a huge rally, but further recovery is possible. This is an inside day with a little red body, so it's kind of neutral. I'm not looking for big extended trends in the near future anyway. I think that's a good run. Maybe we'll have a pause. Holding above 77.20, 77.00 is obviously positive. That will be the key with support for the week. Maybe we can make it up to 78.50, 78.60, but I'm wondering if that may hold things for the time being. Okay, dollar yen looks like we're heading lower. We have broken what should have been a good support level. It was a good support level around 109, 109.00, 108.90. We broke that last week and continued to sink. This 109.00 level was expected to be good resistance once it was broken, and clearly it was, because we topped there on Thursday and Friday. Friday, a bit of a doji there, showing that the market's kind of in balance, but bit of a doji on Thursday, really. But I think that the pressure will be to the downside. I fancy further moves to the downside anyway, just looking at my other time frames. We are getting a little bit oversold, but as I say, looks like we are building some momentum to the downside. Wouldn't be surprised to see us target 107.95, 107.75, maybe this week. Euro yen, what can I say? Clearly just going sideways. A series of dojis, hammer thrown in for good measure, but all of this just sideways action. Thursday, I thought we'd actually finally broke lower. If you look at the short-term chart, I won't put it on here, we actually broke a trend line, but we've just recovered on Friday, so there's nothing you can do here, really. This looks like it could be a double top pattern, but the longer we just go sideways, the less chance that that is a double top pattern. There's nothing really I can comment on that. We just have to wait for the break in either direction. This is the weekly chart for the euro versus the US dollar. We had some good support down around 117.00. We expected a bounce. We got a good bounce. I didn't think we'd get straight through this trend line as easily as we did, but we did. And we've now run up to the 500 week moving average at around 109.70, 109.80. We got as far as 119.70, 119.80. We got as far as 119.94. Weekly chart doesn't look too bad. I just think we're going to get caught up in this sort of area here. Well, I guess we already are. What's the high there? 1989. So I think that's why we're struggling. Obviously, the 500-week moving average is having some effect. If we get up through 120.00, then we look like we'll test the 100-day moving average around 120.50, 120.60. But again, I'm not seeing any pattern or any sort of indication that a big move is on the way. It seems like we go up and then we struggle a bit, and I just don't feel this is the start of some big move up. We have been in a bull trend for a year, and in theory this is just a deep correction to the 38.2% fib, and then we've bounced. So the longer term we are in a bull trend, and we are above the 200-day moving average, and we're trying to get above the 50-day moving average up to the 100. So I guess I have to favour the bulls. It's just not a convincing move, or I think I'm going to jump into this and hold on to a long for days, weeks or months. It's just not giving me that feel yet. Anyway, we'll monitor it and see if we break some levels that might indicate that the bears are really getting control of this market. Canadian dollar versus Japanese yen. I thought we could be building a head and shoulders pattern here. I thought left shoulder, head, right shoulder. We've got a lot of failed patterns going on at the moment because the market doesn't really want to move. FX pairs are really just stuck in sideways trends. On my fear, I'm going to say a fear because I don't really want this to be just stuck in a sideways trend, but my fear is that this is now what's happening. We're developing a channel over the last few days. We're just going to trade sideways. On Thursday, it looked like we'd broken below the neckline of the head and shoulders, and that's not the neckline, that's the channel. But I thought we'd broken below the neckline of the head and shoulders. I've taken that off my chart now because it failed. We've moved up to a cluster of moving averages. This is the 1 hour chart, but really it's not developing as it should have done if that is a head and shoulders pattern. On the daily chart, you can see that this might be a bigger head and shoulders pattern. This might be the shoulder, the head, and we might now be building a right shoulder, but I think that's a loose argument, not something I can really back up at this stage. So at the moment, yeah, look, you can see on the daily chart, you can see the daily candles. Great if you want to just trade, just job the range. You're a scalper, but there's nothing to do here swing trade wise. Doji. And then two candles which are sort of dojis just with wide bodies. That's not telling me anything really. Down one day looks quite negative, looks like we're actually getting some direction, and the next day we would just reverse higher. It's a bit of a theme for these Forex markets, lots of sideways action, and I personally find that quite difficult to trade. Having said that, cable actually is showing signs of some direction and looking quite positive. 100-day moving average doing a great job as a support level as we suspected it would. We had some resistance. Where can I show you this? Okay, on the hourly chart, we had just some fib resistance. This is a 23.6% fib, and we were shorting it up there, and that did really well, just as a scalping opportunity. We did that throughout the week, and then I suggested that once that breaks, once we get up through 138.15, the market should have a good run up. We're just starting to do that. As you can see on this hourly chart, we've got some trend lines to test up here around sort of 138.50, 138.60. So we're going to have to get through 138.70 this week if we're going to see another push higher up to this high around 139.15.20, and above there we can get to the 50% moving average, 50% fib, which is at 139.50. So we'll update that one during the week. Support now at what was the previous highs on this little move around 138.10, 138.00. So the market will have to hold above there if the bulls are going to gain this, keep control of this momentum to the upside, which we're just starting to see on Friday. Euro versus the Canadian dollar, lots of sideways action, unfortunately. Since Easter, the Forex markets, most of them have just been flatlining. That's the hourly chart for the Euro versus the Canadian. We'll have a look at the daily chart, and as you can see, we're just hovering around this 23.6% fib around the 150.00 area. We seem to keep trying to get through it and then pulling back. Long upper wicks on the candle show that there are sellers around that level, and then even if we get up through there, we've got quite strong resistance here around 150.60, 150.80 from the 50-day moving average and the trend line that goes back about 2.5 months. So bulls really need to get through 151.00. That's the 500-day moving average if this market is going to build any momentum to the upside. But for now, it looks like we are just going to have to wait for a breakout of this range. It's a bit of a rising triangle, ascending triangle, so probably we will break out to the upside, but there's no point in jumping the gun. Wait for the price action to tell us which way it's going to move. Pound versus the yen looks like we're in a recovery stage. We tested this lower trend line here. We spiked below it. We did get a couple of false breaks in various different patterns this week, so it was a tough week. Head and shoulders patterns failing all over the place. A false break here would have probably hit some sell stop to open orders and probably some stop orders on longs as well for those who are looking for it to bounce off the trend line. So that would have caught a few people out. Now it looks like we're bouncing. So yeah, possibly pound strength against the yen. I think the pound in itself will strengthen, as I've just shown you, against the US dollar. I think the yen can probably strengthen against the US dollar too, but according to this chart, it looks like the pound will win overall. You can see the pound held nicely onto the 500-day moving average, that 500-week moving average. That's a weekly chart down here, the green line. Nice bounce off there again, so that's kind of positive for the pair. And we bounced off the 50-day moving average just above the 23.6% fib. So yeah, nice bullish candle, bullish engulfing. It's taken out the previous 2 days of price action. So all in all, looks pretty positive for the pound against the yen. New Zealand dollar and the Aussie dollar had this extraordinary run up on Wednesday and Thursday. Not really sure what was going on, but you can see once we beat this was supposed to be a very strong resistance level. This trend line here, New Zealand dollar against the Canadian, I'm looking at now. This was supposed to be a really strong resistance level. The trend line goes back almost a year, certainly 11 months. 200-day moving average there, just below the 38.2% fib at 89.67. I really did expect that to hold, and on Wednesday it did hold. But Thursday just burst through it. It took a long time. It didn't happen until late in the day, but it burst through it. Now, the frustrating thing is no follow through. We're straight back down through what should then be a big support level. And this is actually a bearish engulfing candle. This is kind of typical of what's going on at the moment. I'm finding the markets very difficult to trade over the last week, ever since Easter. Now, unexpectedly, we've got this bearish engulfing candle, which is really quite negative. Weekly close below what should have been a support level. Obviously, once we broke the resistance, it should have become support. So it's confusing. I didn't actually trade this pair on Friday, and I'm glad that I didn't, because I would have lost money. So now it looks like we could, even in the early part of this week, just wipe out those extraordinary gains that we saw on Wednesday and Thursday. We haven't seen a bullish candle like that for a long time in this pair. So yeah, again, difficult, erratic. Trends that you can't really jump onto. They last for a day or two and then they just reverse. It's a tricky time. It's not only in the short term that some of these Forex markets have been trading sideways. This is the weekly chart for the pound against the Canadian dollar, and look at that. You know, that really is very, very much a sideways trend. False breakout of the trend line earlier this year. Now we're back in it. Look at these weekly trend lines, weekly moving averages. They have been going sideways for over a year. In fact, some of these have been going sideways for, looks like, 2 years. Really difficult to jump on a trend. Swing traders are having a nightmare at the moment. There's nothing that you can really do and run a position for more than a couple of days. Certainly looking at that weekly chart for this market would indicate that that is the case. Having said that, I hope that this is the start of a move that could work for swing traders market. This is the US dollar versus the ZAR, the South African Rand. Now, we had identified right at the beginning of the year this really good support level around 1450, 1440. It was the 200-week moving average. There was a lot of Fibonacci support down there. Certainly that held through December, January, February, and March. But now in April, middle of April, we're just breaking below that level. So that really is significant. It should indicate further significant moves to the downside. We're breaking trend lines here. We've managed a little bounce back to the trend line, which is around 14.35.40 on Friday. We rejected it and we just started to come down into the close on Friday. So little blue candle. I don't think that that's anything to pay attention to. I know we're overshort on the daily chart, oversold on the daily chart, but that can remain the case for a long time and the market can still go lower. We're certainly trading with the trend if we're short this currency pair, because as you can see, the market has been in a bear trend for a year, since April of last year. So it's a year-long bear trend. Looks like we're breaking previous lows. So that would indicate to me that further significant moves to the downside is the most likely scenario for the dollar versus the South African Rand. If you're watching this video a day or two after I've released it to subscribers and you are not a subscriber and you're interested in what I do, daytradeideas.co.uk, please do have a look at my website. There's a lot going on there. Education, there's a course, and there's all sorts of markets that you can subscribe to if you are interested in, let me try and scroll down, if you're interested in some daily technical analysis to help yourself either learn, or if you are trading, perhaps that will also help you. All the products are down here, about halfway down the page if you scroll down, and you can see the Forex markets and the stock markets that we cover, So please do have a look.